Let's talk about a virtual chief financial officer and how do you hire one? How do you become one yourself? If this is the kind of line of work you want to really get yourself into. So to this conversation, I really want to give you a few hard facts first. Okay, I mean until recently, only large organizations could afford to hire a chief financial officer. I mean, if you are a small business owner, let's say 10 years ago or 15 years ago, it was kind of hard. Okay, so now, the cool thing is that after the great financial crisis of 2008, you have and also the fact that you have more technology being applied to financial processes at the business level, and especially because you have AI nowadays, smaller businesses can invest in virtual CFOs for a fraction of the cost of a traditional CFO. So that's kind of cool. Okay, now CFOs help business owners make sound business decisions through services such as cash flow management, forecasting, and strategic planning. So if you think about the CFO, it's not just for bookkeeping. Actually, CFOs don't do bookkeeping. If you need bookkeeping services, hire a bookkeeper. Okay, if you need an accountant, if you need accounting services, hire an accountant. CFOs really go above that. Normally your CFO will coordinate bookkeeping and accounting services. They will oversee those functions. Okay. So into this conversation, I want to explain to you what a virtual CFO is, why this concept has become so popular, and how to become one yourself. Again, if this is what you want to do. First thing first, what is a virtual CFO? Let's talk about that. A virtual CFO, a virtual chief financial officer, helps a business owner make sound business decisions based on their expertise in financial planning, financial reports, and financial strategy. So when a business starts off, the business owner or CEO generally wears all the hats. So during a business's growing phase, a business owner commonly takes it upon themselves to interpret financial reports to the best of their knowledge. However, CEOs are also busy running their primary businesses, okay, their business activities. So minimal time is actually invested in learning about key financial metrics and getting deep insights from financial data. Let's talk about the responsibilities of a virtual CFO. So basically, if you are a business owner, if you are the founder, if you are the CEO, you don't have time, right? I've already established that. So when you have a virtual CFO, basically you are able to have a bird's eye view of your company's finances, because the CEO of a growing business can sometimes get away with their limited knowledge until they start running more sophisticated operations as a result of growth. What I'm trying to say here is, if you're a small business, if you're a startup, you may actually get by doing journal entries yourself, by really doing general ledger accounting, like by doing trial balance. Those things are pretty easy. I mean, if you have accounting software, you can do it, not a problem. But if you're growing, if you are seeking, let's say, outside funds from investors, and you want to go to a certain level, not only from a financial point of view, but also from a regulatory point of view, you got to really be more sophisticated. Okay. So usually this is when things start to get overwhelming for a business owner. So at this stage, basically, you might realize that you need more than basic bookkeeping services, and you will start entertaining the services of a CFO or virtual CFO. So unlike a CEO, I think I've already established that the CFO is primarily focused on the financial aspects of a business. And unlike the CEO of smaller businesses, the CFO doesn't wear the marketing hat, the salesperson hat, or even the HR hat. Okay, so a CFO's expertise is focused solely on financial matters, freeing them to be the main financial strategist for the business and a strategic business partner. So when I speak about a virtual CFO, it just means that you don't have to hire the person in your business full time. No, the person can actually engage can actually let's say coordinate financial activities for your business remotely. Okay, the person doesn't even have to be on your payroll if you don't want it that way. You actually can keep them as an outside contractor. That's fine, a 1099 employee, if you will. So let's talk about why are virtual CFO roles becoming more common. Well, I think I've said this before that basically you have history, you have technology, but most importantly, you also have trends in the market. Okay, traditionally, the CFO position was an in-house, full-time employee position. Until recently, only big corporations and businesses have had the luxury of being able to afford a decent CFO. Okay, and in fact, the average salary of a CFO in the U.S. was around $400,000. Okay, last year. So that's a lot of cash. If you're a small business, chances are maybe your entire revenue is not even at that level. It's not even $400,000. Okay, so what happens here is that technology, artificial intelligence, software, all these things have actually contributed to making sure that you are having a more democratic landscape when it comes to a CFO. So a virtual CFO is a proven solution to close the gap for small to mid-sized businesses that are actually growing to the point that they need a financial executive, but who don't actually yet have the revenue to invest in a full-time CFO. So a CFO used to be all or nothing, but now businesses can hire virtual CFOs on a flexible and part-time basis. So that's really good because you are able to see more talent come into the market, especially in the first few months after COVID struck a couple of years ago. You saw a lot of small businesses actually ditching the whole full-time CFO role to more of a part-time CFO or even a virtual CFO. So businesses hire virtual CFOs to go remote. Okay, it's not really uncommon for virtual CFOs to have video conferences on platforms such as Zoom once a week or even on a monthly basis, depending on the business's budget. This makes a virtual CFO a lot more affordable than a full-time CFO. So another reason why, let's say, a virtual CFO role is becoming more common is because many businesses are looking for ways to lean out, especially as a result of the pandemic. Okay, and many companies now prefer remote contractors versus employees because of all the benefits that come, attached to contractors. For example, you don't have to pay a virtual CFO's benefits such as a paid holiday and paid medical leave like you would with a traditional employee CFO. Something to really think about. So let me talk to you about the value added here. So if you think about a virtual CFO, what kind of value do they add to your business's bottom line? So a virtual CFO can help with a mixture of the following. First of all, I want to establish the fact that I think I've already said it, but I want to reiterate it. A virtual CFO is not going to be your bookkeeper. A virtual CFO is not going to be your accountant. Okay, for bookkeeping and accounting services, just hire someone to do it for you. A CFO really brings a lot more acumen, a lot more expertise, more sophistication to actually handle your financial matters. Okay, so a virtual CFO can help with budgeting and forecasting at a very high level. Okay, comprehensive and detailed financial reporting and analysis. Here, I'm speaking about financial reporting that complies with U.S. GAAP, United States generally accepted accounting principles, but also IFRS if your business has an international operation. IFRS stands for International Financial Reporting Standards. Okay, those are accounting regulations that investors and regulators look at to make sure that businesses are properly accounting for their transactions. A virtual CFO can help with deep insights on business finances, can help with analyzing large amounts of financial and operational data for trends, so you have a clear idea what's really happening in your business. A virtual CFO can help analyze financial trends and budgets to identify issues and opportunities for the business. Such a professional can also review financials, develop insights, make recommendations. That's really important. And also formulate strategies to support business growth and make business processes more efficient. A virtual CFO can actually help with cash flow management, can help identify opportunities for your business to expand and grow, can also help with strategic planning and execution. That's what you want anyway, okay? And a virtual CFO can also give advice on the latest software and tools, not just financial software, not just accounting software, not just accounts payable software, not just accounts receivable software. A virtual CFO can give advice on a CRM software, for instance, client relationship management software, or even on ERP, enterprise resource planning. A virtual CFO can actually help with preparation and presentation of monthly and quarterly financial reports, as well as the review of end of year financials. Can help identify and evaluate the possible impact of new products, new service offerings, or new business initiatives. Can help also develop reliable cash flow projection processes and forecasting models, and also review debt reduction strategies. Now, if for any reason you are listening to me right now and you want to become a virtual CFO yourself, maybe you're not a business owner, or you are a business owner, or you just see an opportunity, you sense an opportunity in becoming a virtual CFO yourself, there is a lot of potential. There's a lot of possibilities, okay? Now, most virtual bookkeepers have some types of background sets in bookkeeping, accounting, or a related financial job. Bookkeepers, accounting professionals, and other financial professionals can increase their profit margins while adding more value to their clients by including virtual CFO services. The first thing you want to do is you want to employ the right tools. Next, you want to develop your offer, and you want to really be strategic while offering virtual CFO services. First of all, let's talk about the right tools. So because of the remote nature of a virtual CFO, a key step in becoming a virtual CFO is actually becoming well-versed in cloud accounting software such as QuickBooks, such as FreshBooks, such as Wave, such as Xero. So a cloud-based accounting system allows you to access your client's data from anywhere in the world. So software like those I've just told you can also automate many basic bookkeeping tasks once associated with full-time bookkeepers and accountants. So to actually get a competitive edge, you want to really make sure that you are having the right tool. So next, you want to develop your offer. So basically, not all CFO services offer help with taxes, payroll, or accounts payable, for example. So you want to narrow down on the services you like to focus on, right? And those services must actually resonate with you when it comes to your skill set. Lastly, there are many online courses on how to add virtual CFO services to your existing offerings. And so when I speak about offering virtual CFO services, you want to make sure that you are really speaking to the needs of your industry. See, every industry is different. Every industry has several needs. So make sure you are speaking to the needs of the industry, okay? So virtual CFO services offer a more affordable way for smaller businesses to leverage a CFO's financial expertise without having to pay hundreds of thousands of dollars per year for a traditional CFO, okay? This is something to really think about, especially if you are trying to scale real fast. You want to scale in your business, you want to scale it in your offering. That's something to really think about this year. Let's go a little further here. So basically, if you think about virtual CFO, if you are trying to understand the whole process as a business owner or as let's say an accounting professional, it's important to understand that if you want to look at a virtual CFO, you got to understand the financial transactions from a bird's eye view. So accounting is actually the process by where your company's financials are recorded, summarized, analyzed, consulted, and reported on. Bookkeeping, on the other hand, is the recording part of this process in which all of the financial transactions of the business consisting of income and expenses are entered into a database, okay? So, what's really the difference between a bookkeeper and an accountant? Well, an accountant is in charge of assessing, evaluating, if you will, and interpreting the financial data of a company and for reporting on it. So, an accountant has a higher skill set than a bookkeeper, whose primary responsibility is handling the actual recording of the company's financial transactions. So, an accountant usually has a degree or certification, CPA for instance, and is paid better than a bookkeeper. So, typically, a bookkeeper reports to the accountant. A bookkeeper does not require any formal training. However, a bookkeeper's job is important also, okay? The information the bookkeeper is responsible for gathering and managing affects how an accountant will interpret the financial information of the company. So, based on this information, the accountant provides recommendations to management or the company's owners about spending, tax issues, or other financial concerns. So, if you think about the bookkeeper, think about the fact that the duties of a bookkeeper will vary depending on the industry you're in. But let's say generally, a bookkeeper will recommend, implement, or manage accounting software for the development of a single or double entry system of accounting, for instance. Okay, will recommend, implement, and monitor bookkeeping policies and procedures. Will develop credit and debit accounts, including the assigning of expense categories. Will enter expenses and income into the software, including non-digital methods of payment such as cash and checks. Will handle banking activities, including new deposits. Will train staff on the use of relevant bookkeeping software, such as how to enter expenses. Will verify recorded expenses, making sure that those expenses are within company's policies and manage approvals. Will verify the accuracy of information and that the accounts balance if a double entry system is actually in effect. Will maintain records and backup and archive as necessary. Will assist the accountant in the preparation of financial statements. Will ensure bookkeeping adheres to accounting best practices and government regulations. Will assist with audits and will flag discrepancies. So, what about accountants? Let's real quickly talk about that. So, what are the duties of an accountant? Okay. Now, the duties of an accountant can be broken down into four areas. I want you to really pay attention to this quartet. You have data management, you have financial analysis and consultation, you have financial reports, and you have regulatory compliance. So, when I speak about data management, basically an accountant will oversee how data is stored, managed, and updated. For instance, a bookkeeper might recommend the software for a double entry system of accounting, but the accountant would approve it. You also have financial analysis and consultation. So here I'm speaking about an accountant properly assessing data and advising management. In terms of financial reports, an accountant must be able to generate the standard business reports and statements required by businesses and the IRS. And finally, you have regulatory compliance. So you are being up to date on government regulations and ensuring the company is following industry standards is actually the responsibility of an accountant. Okay, as I said a little earlier, if you are in the States, you have to really comply with the US GAAP. Okay, and now, can bookkeepers call themselves accountant? Not really, not really, because an accountant typically has a degree and relevant work experience. However, there is no formal certification process for becoming an accountant. A bookkeeper could call himself or herself an accountant, but it would not be advisable to do so unless he or she had the relevant education or some serious working experience that included the various facets of accounting, as I said a little earlier, right? Data management, financial analysis and consultation, financial reports, and regulatory compliance. A bookkeeper cannot call himself or herself a CPA unless he or she achieves the designation. So a CPA is actually earned after completing specific educational and work requirements and passing an exam. So qualifications for becoming a CPA will vary from state to state. So that's important. Now, accountants can sometimes do bookkeeping. Okay, some small companies may not have an official bookkeeper. So an accountant will also will also take on the responsibilities of a bookkeeper too, or the bookkeeping duties may be assigned to an accountant with less work experience. So, in conclusion, in today's conversation, I spoke to you about a virtual CFO and how to become one if you want to go that way. And so I gave you the hard facts, the best practices, and also spoke a little bit about going further and spoke about the responsibilities of an accountant versus a bookkeeper. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.